between Iran and Israel. So once escalation erupts, of course, oil prices will spike higher, and it will be too late to enter the move. Uh, Even if we're going to be buying then, will probably be slippage and will get filled at higher prices. Besides, at this current level, we're looking at 85. Our stop only has to be at 82.50. So just $1.5 in risk. We can even have a stop at 82.70 for that matter. But of course, we don't want again to be too close to a level one, and therefore we'll stand with $82.50. So I'm going to highlight the tradable labels. Where that's a second. So we have a complete motive now. We can also get to see high degree 1 and high degree 2. Of course, this can still drag lower to $84.50. But then, of course, what happens if there is sudden breakout of hostilities? Will be, of course, unprecedented. You cannot really, none of us can do an entry on a sudden breakout of hostilities. And it's expected, like that report out of Central Intelligence says, a breakout of hostilities could probably um, come in across the end of the week, maybe even before. Okay, so we're 38.2%. We are at a level one. We have done a five-wave swing, so we can transcend, of course, level one. We can get to see 84.57. It's really everyone in the and the risk premise. It is possible again to go all the way down to 84 and 84.50. I would personally just do the entry live. Or count, that's me. I could be mistaken, but it's better to be in the trade than out of the trade again because this is a fundamental trade. And if there are hostilities, of course, we cannot do the trade at that point. Actually, some brokerages would suspend trading during very volatile conditions. All right, let's take it higher to check the stop. The stop here shows very clearly, of course. We can also indent the leading diagonal on this hourly time frame. right? So we are of course contained at 50%. We are at the most assuming we get any kind of retractions, assuming there is diffusing of the situation, which is almost impossible really, because the parties involved don't even have diplomatic ties, and therefore there is high risk here. We're bouncing 61.8. We can first bounce all the way down to 38.2, which is $83. Right on top of that, level one, 83.11. So this is 83. So to allow for this, right, uh, at least until end of week, we can have a hedge. $82. That's where it is. 81. It's actually 82. We won't have it at 82. So we're leaving it 82.12 at that point. It's possible actually to have it at 82.20 also. So assuming we enter now 84.75 or 84, let's just say it's 84.75, a hedge at 82.20 or 82 is $2.17 minus 20 is $2.50. So probably a very containable risk. We're going, of course, to the neckline, $90. There has been reports that should there be hostilities, really, we can get as high as $92 and we can get as high as $94. So I believe going until at least the end of the week, want to have it take profit higher than $90, we can go for $92. Across the end of the week, we take profit levels. Okay, what is the relevance of the hostilities? The relevance of the hostilities is that assuming Iran responds to the bombing of their embassy about a week and a half ago, they're probably going to be responding, and if they're responding, then Israel will get back to respond, and then Iran will also respond, and we get into a situation where we have a tit for tat. That's what's called, and there could be escalations, or at least even if there are no escalations, there will be the threat of cascading escalations, and this threat is enough to keep an upside pressure on oil, and therefore, of course, you want to have an open target across the end of the week, and the move would be very lucrative to take if we are going to be waiting for continuation of that correction all the way to $83 and $83.50. That's really okay, but we run the risk of being out of the trades should there be sudden escalations any day or even any moment. To take a look at the longer term view, we are right now, of course, we were looking at the 3 and 4. That's what we're trading on the 4 hours. We get to the 5 at that level 3. We hit the neckline definitely. So neckline is $90, can even be higher to $92. We have here the same neckline on the daily, showing of course 92, and in between 92 and 95 is showing at 90. In between 90 and 95 is of course 92. So we can have a target at 92. If there's outright war, someone here asks if there is a war. Unlikely, really, there is a war. But if you have the same situation like in Ukraine, then we move to 100 and 106 and 110 and so on. But highly unlikely that there is a war. But of course, surprises can happen, and the market does unpredictable things. So at least across the end of the week, we keep an open target.